Big Bear AI stock has gotten absolutely destroyed over the last week. Is the bloodbath going to continue, or is it going to give us a big old turnaround sometime in the near future? I have the technicals that you should be watching for, and I also want to talk just a little bit fundamentally about Big Bear AI, and I want to bring in Palantir just to give that sort of comparison just between their last investor presentations. A very small look at it, but I think you're going to find it very enlightening when you take a company that has made it and is continuing to grow versus a company that is still trying to make it. I think you're going to find it very, very enlightening in terms of not just these two companies, but anytime that you're looking at a company that's trying to make it. How can we tell just from pretty much the first slide of their investor presentations? Guys, if you want to see more of this, my technicals, my buys, my sells, they're available over at the Discord. Me and a whole team of people are over there to support you in your journey towards financial freedom and building alpha in your portfolio. Big Bear AI is just one of the companies that I've used. If you guys want to come on over and see everything that I and the other team members and the Discord has to offer, the link's in the description. Code word doctor when you sign up is going to save you 50% off your first month's sign up. Let's jump over into the charts. We'll start with the technicals, and we'll talk a little bit more towards the end about Palantir versus Big Bear AI. So here we go. The charts for you. We're going to kick things off with the daily chart here, just so you can see what the last 1, 2, 3, 4, 5 trading days. So back here on the 7th of July, there's a little bit of hope that that could have held out for us. Now, mind you, I'm going to share some other technical indicators that I think you should be following. But with that long bottom wick, there was a little bit of hope that maybe it would continue, but on the next peak, it just could not sustain. And the fact that it closed down below this narrow body of this candle right here signaled that there's probably going to be likely a further sell. So we should be watching for that. It's like, well, Doc, if there was going to be a further sell, like, why don't you say or do something about it? I did say there'd likely be some softening, and I did do some things about it. One of the things that I did was I sold a call against my shares with an 850 strike price, and this thing peaked at 841. And when you have a spiked up price like that and you expect a drawdown to happen, well, that's one way that you can still keep a hold of your shares potentially. There are risks. If you guys want to know more about options, there is some coursework down in the description as well. We'll talk about that later. But sold a call against my shares, and well, the drop happened. I was able to not only keep those shares, but also lower my cost basis in the process through the premium that I collected through selling that call option. Something else that I did was I did some put selling as well. That meant that I could potentially have to buy those shares. Now, mind you, I used a 750 strike on that, which means I had to buy 100 shares at $7.50 because this thing closed down below $7.50 and the expiration was for Friday. And it's like, well, Doc, you got a bad deal then, man, because this thing closed, the closing price was $6.44. You paid $1.06 more for every share that you got. And I gotta say, well, yeah, but not really, because I actually sold two different puts. One for, I think it was $55, and then I bought it back when it was only worth $5, so I got $50 net premium on that one, and then I sold another one for $67. I actually think I have those numbers botched a little bit because the total premium that I collected at the end of the day was $122, so that reduces my cost basis for those 100 shares by $122, or $1.22 per share. So if you take the 750, subtract off the $1.22, it takes you all the way down to $6.28 per share, which means that I'm 16 cents per share ahead on every one of those 100 shares that I bought. And I also now have more assets that I can sell further calls against during the next rally that we see. Now, there, of course, is risk that goes along with that. What if this thing keeps on selling? Well, eventually it can cross down below that break-even price that I have of that $6.28 per share. Yeah, that can happen, but I do think that we're on a good path. I'm going to get into the technicals now, further sharing with you here. By the way, I've posted those transactions over at the Discord. Links in the description, code word doctor, so you can see exactly how I'm playing stocks like Big Bear AI. So for the daily chart, what are we looking at? First of all, this blue line here is the 20-period moving average, and this is something that we were struggling with. It broke up above it, which is a bullish thing. We could see a reversion to the mean right around 575 and take that bounce on the 20-day. that's possible. I did say as we got around 80 that this thing was fairly overbought and we were likely going to see some softness coming into it soon. And somebody said in the comments, I bought this thing 3 days ago and now I'm down money, and they were pretty angry about it. Now, mind you, it never feels good to be down money, but you got to have your reasons for buying it. So did you buy it because you thought it was going to go straight up from there? Was that your expectation? If so, maybe writing down a list of your expectations for what you expect from the trade that you're doing or from the investment that you're doing, really exploring that thought. Why am I buying this thing? This video will go on for a long time if I get into all that nuance, but I will say you should have a clear idea of what you're buying, why you're buying it, and what you expect to happen over time with that security, in this case, the shares of BBAI. This is one I fully expected to pull back from where it was at, and I did some things to take advantage of the drop that we were likely going to get, including what I think is some pretty decent positioning in the near term with those shares. So for BBAI, I have my exposure to it. I shared it with you. I shared the receipts over at the Discord. You guys can go and check it out. Like I said, if I jump out to the weekly chart on this thing, here's one big thing that I'm looking at when we look at the moving averages is this 50 nearing the 200 week. That golden cross on a weekly basis is a very strong bullish sign. So we want to see that happening, because if it does, that is a golden cross, and that could signal continued bullishness from here. And on something like the weekly period chart that I have on the screen in front of you, that could signal that longer term trend. Now, mind you, check out the week that we had starting at June 30th up till, well, Independence Day if you're in the United States here. And then this most recent week that we had, not a great start. And you can even look back previously to what that looked like. I don't think that we're in the same conditions as we had as this thing sold off before, because this was selling with the market selling. So if the overall market bias is a net sell, well, yeah, that can also drag it down. But if we're going to stay bullish in the markets for a little while longer, I think that overall bias could also impact BBAI, along with the other risk assets that we have out there, such as crypto. Now, if we go out to the monthly chart, something important happened most recently. We actually started getting a 50 period moving average on this on a monthly basis, then a simple moving average, and we actually found support at it. We actually opened June above that 50 period, and we also have that 20 period coming up to cross over it. That's called a bullish crossover. Whenever you have the faster moving averages crossing over the slower moving averages, a high wick like this does indicate some selling pressure. So on the monthly chart, RSI 62, and it is a little bit level right now, but still rising from what we have, the most recent peak that we've had on the RSI up above the previous peaks. And we also have those higher lows coming up. So even though we have some softness right now, you can see the price climb, you can see the momentum climb, but we also have a volume build as well. So over a longer term, this is the monthly chart, every candle 1 month. Over a longer term, I think that we could continue to see some increased price action. So going back to the weekly chart, the RSI took a smack right off of 70.6 and then relaxed back down to 61.6. So we're getting some of that momentum reset. And then back to the daily chart, we were up near 80. It was actually 80 on the nose as I have my cursor here on July the 7th. And we sold back down to 58.58. So that momentum reset is very good for us. Now, I think based on the moving averages and some other technicals that I'll put up here for you in a moment, I think we fill this gap. We touched the 20, maybe push down through it a little bit, but I think we're going to quickly recover over it. Once again, assuming that the market bias holds out on this thing, we will have to continue to monitor momentum. We will have to continue to monitor the moving averages, but I think that there's a lot of hope to be had here. So let me show you a few things that I'm looking at here. So let me unhide my technicals. And what I want to show you is all these white lines that showed up here as I show my Fibonacci extensions. And what you'll notice is that we have just a whole tangle of resistances, and there's also a pivot that happens to be up here as well that happens right around the $8 mark. And you'll notice that's when we stopped that massive rally and started losing volume and starting to get into chop. Well, if you think about it from a momentum, like firing a bullet, for example, you get that initial like boom, and that thing fires out of the gun. Well, there's the air resistance itself, but then imagine that it's hitting several layers of glass after that, and it pushes through that first layer, but now it's slowed down, it's starting to mushroom, it's starting to get more resistance overall. Then greater surface area, hits that glass, and now it slows down even more. And then pretty soon it can barely stand to crack it before it starts to ricochet and pull back from that. And like, it might not be a perfect analogy, and I might have some of my physics wrong, but that's the idea of it. And that's what we're seeing right now with this resistance to the upside of this, that around that $8.41 that you see up here, where we just finally couldn't do it, and you get that long high wick on this thing. That's the signal that you hit that last pane of glass. You just couldn't break through it. After you test the ceilings, then it's time to start looking for the floor, and so far we haven't found it. So where is that floor? Well, let me put this back up here. Just from the moving averages, the 20 periods around 575, which would also close the gap down here to these previous candles. And if we close that and we'll open this up and start looking over time, we'll put up the overall Fibonacci retracement for you. My goodness, extension, retracement. So this is a Fibonacci retracement. We actually just closed down below the 38.2, which signals that we could potentially sell a little bit lower. And, I would believe that. And I still think that's good because I think it allows for excellent positioning. And I talked before about if we're going to see that 2.5x, I think it happens from more of a $6 price tag than it would have done it from like an $8 price tag. I still think that we're in that $10 to $15 range. So anywhere from, what would that be? From $6 would be at about a 67% upside to $10, 2.5x up to $15. Well, let me put up another one for you for these Fibonacci retracements. And now what you see is this 50% Fibonacci retracement line show up at 636. And also what that does, you'll even see up above, is that we have that further layering, if you will, causing an area of resistance to happen. But these ones down below are support. This is going to slow that fall back down, if you will. So now this is that quick drawdown that we got before, going back to July 8th, and now we're starting to slow down that descent as well. And we certainly have a gap right now, but let me put on the last Fibonacci retracement that we had, which you'll notice aligns perfectly. The 50% Fibonacci level, which is a very key level, aligns perfectly with that 20. So that's at 576, and the 20 period is at 573. So we're within 3 cents of each other, where you see that coinciding of the moving average with that support showing up. And with this peak that we have here and the bottom that came before that, we get just one more, at least on a daily chart basis, you start to see even more layering happening. You can see it right in here. So we could potentially bounce now. I think a better bounce would be down here. I would love to see that gap fill first. I would love to see that return to the mean, that mean reversion, if you will, down to the 20 period, and then it move back up. We have the 200 on the bottom, the 100 MA above that, the 50, then the 20. This is a perfect bullish structure here, with the exception that the 100 period moving average still has a negative slope. So if we get to turn that thing around, we're even better off. So from the Fibonacci retracements, from the Fibonacci extensions, what we see from that is a secondary layering down below where we're at right now for support. With this 20 period moving average, you also see down here from about 542 up to 576, even more layers of support coming in. So will this thing come crashing back down? It might give up quite a few more percent, but I think that that's when we're going to start seeing signs that we're going to make that next jump up from where it's at right now. Now, if I take down these other Fibonacci retracements and just leave, hey, come on, Doc, you could do this. There we go. Just leave the most recent one with the extensions. That's the 38.2. The 50% is all the way down here at 5.54. So for massively moving stocks, 38.2 is oftentimes where you find that bounce if the momentum is going to continue upwards. If we slow down a little bit, we might see it at the 50% retracement level before it starts moving back up. And so that can chop down our floor a little bit, but that would also set up our next Fibonacci extension whenever we find the bottom of this thing and start turning back around again. We don't currently have that signal yet, but we can start watching for it. We have clues of where that bottom might happen to be. So let me put up the exponential moving averages just for a moment. We'll take down the lines on this thing, and we'll also take down from this the simple moving averages, just to keep a nice clean chart on the daily chart. So we're down below the 5 and the 13. We actually closed below both of them. And with the 5, that takes us back to this candle back here on Monday the 7th. That's going to disappear when the market opens back up on Monday. And we're going to get this lower close at 759. And then the next day after that lower, that's going to push the 5 period down, especially if the price action is down, which means we'll get the 5 crossing down over the 13, which is a bearish thing, but it is going against being up above the 50 and the 200. So that could be a near-term drawback with significant evidence that we're actually in bullish territory by the simple moving average EMAs. Simple moving average, the 200-day, the 50-day, and also the exponential moving averages. We're up above the 50 and the 200 for both of those. So overall, right now we're in bullish territory, and so this drawdown could be quick and not long lasting, and we could see that bounce come along based on those moving averages that we see. And if we go out to the weekly, just simple moving averages, we're the 50. I already talked about the golden cross. Let's put up the exponential moving averages here. There we go. We have the 5 above the 13 above the 200. Getting that 50 up above the 200 is going to be huge as well. Once again, signals for long-term bullishness that we have here. And if we go out to the monthly chart, it's very significant when we look at the monthly chart that we happen to have the 5 above the 13. The 13 has crossed over the 50. So let me hide the simple moving averages just for a moment. Actually, I'm sorry. This is really what I wanted to show you, is that the 13 has not yet crossed over the 50. I apologize. The 13 EMA needs to cross the 50 month, the 50 period exponential moving average. That is a big bullish sign that could be coming our way, and it could be coming as soon as next month. As a matter of fact, let's see just how close it might happen to be. So we'll grab our ruler and we'll click on this one, and we're going to drag back to 13 bars. So we actually have, that's actually a fairly big consolidation there, where we have the 13 period for this. So 13 bars takes us all the way back to the beginning of this consolidation period. So 12, 11, 10, 9, 8. So it looks like if we go out another 5 months where we're at right now, it actually puts us into December to see that move up. Now, mind you, it doesn't have to take that long. Depending on where these prices are as they come in for that 13 period, as they continue to be up here, they will also drag up that price. We just won't get a further downward pressure from these that are happening here. So we want to stay north of the 50, north of the 13, and we might come back and retest the 5. We'll watch and see. But once again, that happens to be right around the mid 5s is where that is. Well, right now it's at 531. But like I said, that support, I think it's going to be around 550 to 6. We'll have to watch and see what it has to say. So we have a lot of reasons to be very hopeful for what's in Big Bear AI's future from a technical standpoint. And guys, like I said, I share the technicals, news, information, not only for Big Bear AI, but just so many companies. If you've been following my channel on YouTube, there's probably a couple dozen companies at this point in time that I've shared with you, including some cryptos that are out there that I've shared as well, talking about the technicals and talking about the background environment, the macro environment that they find themselves in. I'm just one of the panel experts there to help you through this process, through your journey towards growing your portfolio, leaning in towards financial freedom, leaning in towards finding alpha wherever it may exist, wherever it could be found. How exactly do we handle these different situations? There's a whole team of us there standing ready to help you and the thousands of other community members that have already signed up over at the Discord. The link's in the description. Make sure that you use the earner tier to get unrestricted access to everything that's available to those community members. And if you want to learn about options, I talked about selling calls, I talked about selling puts. If you want to know about how to use those effectively to build alpha in your portfolio, to take advantage of the assets that you already have, or looking to get into some sort of asset even cheaper. For example, Nvidia bottomed out at $85 most recently, but did you know that you could have gotten a significantly reduced cost basis below that 85 and still got those Nvidia shares, and you could have done it through selling puts, for example? And when you find those good companies for like Nvidia, as a matter of fact, one of the best companies that we have, the biggest company in the world right now at $4 trillion market cap. I think it's actually over $4 trillion. Learning how to use options to your advantage, whether you're buying calls or you're buying puts, selling calls, selling puts, or you're using some more advanced strategies for those, knowing how to use those, knowing about technical analysis, knowing about technical trading, like the Bread Receiver Trading Strategy that's available through Stockmo Academy. There's coursework down in the description. If you click that link, you'll find the 2 courses. There's more courses coming as well, but you can sign up for either one. You can bundle the 2 of them and get a discount from bundling. You can also get a discount with any combination of the courses when you use code word doctor when you sign up for them, and it's going to be a pretty darn massive discount, and it's lifetime access to those courses. And going through those courses and also joining the Discord with the earner tier, those 2 things combined are going to be an absolute power play, something that's really going to empower you as you strive forward in these financial markets, stock market, crypto market, bond market, you name it. So like I said, links in the description. Now, last thing about Big Bear AI when it comes to Big Bear AI and Palantir, I just wanted to share this with you. This is their investor presentation that we're looking at for the most recent quarter. And I'm not going to get too detailed into this. So once we get to the first actual page, there we go. this is what I'm going to consider the first actual page. In their agenda, they want to introduce you to the CEO. And I think that this CEO is a very connected man. And when I say connected, I think he has connections to a lot of government officials in a lot of powerful places. And starting with the government exposure, possibly getting more into the commercial side of things, the corporate side of things, I think that this can really help out. Now, mind you, he has time to prove himself, and I think that it could work out really well over time, especially if that backlog of over 300 million, I think it might be 385 million as a matter of fact, right now it's only about 5% funded, but if he can continue through his connections to secure that funding, which is some of that speculation that's driving the rally, leading it to be potentially the next Palantir, they still are early. And this first page is something that can show you that they're early, because this is the first actual page besides just the introductory stuff that we get. It's like, hey, here's the CEO, and then, hey, here's the growth focus, here's the growth progress, and then finally we get down to some financial performance, and it's okay. Like there's reasons to be very hopeful from what we see here. Now, I do want to switch over to Palantir for their first actual page. Yeah, this is introductory. And then there's some necessary stuff. Here is their first actual page. And what you can see on this is Q1 highlights. This is a company that has made it. So when they say the next Palantir, when Big Bear AI's investor presentation starts to look like Palantir's, which looks a lot like NVIDIA's, which looks a lot like Tesla's, and anybody, like any other company, when they lead with their financials as their first thing, hey guys, you should be excited. Look at these numbers that we're producing. We didn't get that from Big Bear AI yet, but if you're looking for when they've actually started to make it, that they're actually starting to put out some meaningful and significant progress towards growth, when they are actually excited for the money that they have brought in, for the cash flows that they're producing, for the profits that they're raking in, the growing revenues, it's going to show in their investor presentation. And you don't even have to dig very deep. First actual page of actual information should be the thing that really shows it to you. Any other company that doesn't lead with that doesn't have that same story. And so if the prices are super elevated at all-time highs, for example, and yet they're still leading with, hey, here's our CEO, this is our growth focus, this is what we hope to do at some point in the future, and that's how you know that it's a speculative asset, and that most likely there's going to be other opportunities. If it is a promising company, which I think Big Bear AI could most definitely be one of them, that is one big way that you can tell when you look at them just through the presentation without even digging really into their cash flows. And you want a cash flow positive company. You want them to have expanding margins. You want them to have a proven track record for growth in their revenues, growth in their earnings per share. And well, we want that growth story. And right now it is very, very, very early for Big Bear AI. If they start to see some of those backlogs turn into actual numbers that hit their earnings reports, that, especially the bigger the contracts, the better. That is absolutely going to make a stock like this one go bananas, go absolutely bonkers. And so if we see those depressed prices coming again for Big Bear AI, where this thing starts to be down $2, $3, $4 per share, if it happens to come back to that again, and it could, because once again, speculative company, but if it ends up going back that way at some point in the future, then you might want to put your ear to the ground and start listening for, are we going to see this revenue come? And if we do, then we might have several days, maybe even several weeks of elevated prices coming in if we start to hit those hundreds of millions of dollars of backlogs actually hitting their earnings reports, actually being filled out, signed contracts where they're actually have that funding coming their way. That's going to be absolutely explosive and massive. And there's other things that we can do. I'll make other videos on this. This isn't the only video that I'll ever make about Big Bear AI. I certainly want to dig deeper into their fundamentals and share more of it with you. But I do just want to say, again, Palantir, just Q1 highlights, and they got a lot of them. Rule of 40 score 83, that's perfect. And when we go back to Big Bear AI, like I said, this is how they start off first three pages. CEO, growth focus, no numbers, growth progress, no numbers, and then finally we get to some numbers, which they have to get to numbers at some point in time if they're going to present to their investors. But leading with them is that sign that we're looking for. In the early days of this, we're going to have those huge moments where we get some big news for companies like this one. So if I see those depressed prices come back again, where we start to see this thing trading for $2, $3, or $4 per share, I'm going to start looking for, again, ear to the ground. I'm going to share it out over the Discord. Like I said, Discord's 1,000 members deep. There are community members who share the news before any of us even find it. And then we can use that to be like, to recognize just how big it is. And if we find opportunity in it, share it out with everybody. Guys, links in the description for the coursework. If you want to try that, remember code word doctor. And also for the Discord, if you're going to come on over and join the party over there, code word doctor is also going to work. Make sure you sign up for the earner tier so you get unrestricted access. It's going to save you 50% off your first month sign up. Thank you for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.